In this video, I'm going to show you why so many people in Vegas rent longer than they need to and how to tell if you might be more ready than you think. And by the end, I'll give you a simple way to figure out your position without committing to anything. I'm Gwen Lyon with Love Las Vegas Realty. I've been in real estate for over 8 years, and I am here to break down all things real estate in the Las Vegas market for you. Let's start with the biggest reasons I see people think they're not ready to buy. Number one, most people move to Vegas and think they're only going to be here for a short period. Maybe it's 1 or 2 years. Maybe it's I'm going to check it out and see if I like it, and then I'm going to move to California or somewhere else. This is sometimes a stopping spot for people, and they don't realize how much they enjoy living here until they've been here for a few years already. At that point, they've been renting maybe for 4, 5, 6 years. Time flies when you're having fun. Another really big reason that people think they're not ready to buy is that they think they need to have a huge amount of money in savings for a down payment. That might have been true when our parents were buying homes, but now we really don't need more than you would need for security deposit and first month's rent. We need 3% maybe down of the purchase price. Back in the days, people used to need 20% or more to purchase a home, but we need a little bit of funds now, of course. You can't buy a house with no money, but you don't need as much as you think. Another major reason why people think they aren't ready to buy a home is they think their credit isn't good enough. Most people are thinking I need perfect credit, 700s, and unless I'm there, I don't really feel like I'm ready. Again, that's just not true. Most people with a credit score over 600 are ready. Some of the factors are, how much debt you have. Car payments and student loans and credit cards, those can affect the amount of money that you can be qualified for, but oftentimes people are shocked. They are actually qualified for more than they think. And the next biggest reason that people think they're not ready to buy is it's just a little scary. Let's face it, making the biggest financial decision of your life is not something people take lightly. So people just put it out of their mind entirely. And they think, I'll kick that can down the road and I'll do that in a couple years. I need to be in a better financial place, or I need to be married, or I need to be settled down. And honestly, the best time to get in is now, because the sooner that you do this, the sooner that you kind of rip the Band-Aid off, the better it is for you in the long run. So I'm here to remove some of the fear and uncertainty surrounding the purchase of your first home. Another reason that I see that people stay in the rental game is rents in Las Vegas are low, lower than in a lot of other places around the country. And it's really easy and enticing to just kind of get into a rental property and stay there for a really long time, especially if the landlord isn't raising the rent on you. But at the end of the day, you're paying their mortgage. So even if it's a low amount, it's not going back into your savings or your equity. One of the biggest reasons that I hear that people are not ready to buy is that it's the fear of the unknown. And we've been hearing these things for years. I remember back in 2020, we were talking about COVID, and the fear of the unknown was the world coming to an end. People didn't want to buy then because of the uncertainty. But guess what? The people who did have made a killing. And again, we're in a time of uncertainty. We've got political things going on. It's 2026. We've got a war. Is it a war? We don't even know. But at this moment, there is uncertainty. And guess what? That's what makes this a great time, because when things are smooth sailing and everyone's feeling really comfortable and everyone's feeling really positive, everyone starts buying and the prices shoot up. So that's why this exact moment is the right time. Guess what? You're not alone. When you don't understand the steps, it feels overwhelming. And sure, any kind of uncertainty, the fear of the unknown, those are all great excuses that are going to keep you stuck exactly where you are. I'm here to break it down and make it really simple for you. And that's going to take away so much of that fear. You're going to feel really confident and really good about making a big step. I'm working with a client right now. Love the guy. He's telling me that he wants to wait because he thinks we're going to go back to the way things were 5, 6 years ago when he could buy a much bigger house for a lot cheaper. These are things that I hear on a daily basis. He hasn't been in the game for 6 years because he sold his house thinking all of the unknowns It made him very uncomfortable. So he thought, I need to sell, I need to get out of the market. And then he got stuck in that rental. Again, 6 years have gone by and the money that he made off that house has dwindled. And now he wants to get back in the game and the dollar just doesn't go quite as far as it did 6 years ago. So I hear these things all the time that we're waiting for the perfect time. We're waiting for interest rates to go back down. We're waiting for the prices to come down. There's always a reason not to buy. Rates, prices, news, but personal timing matters more than market timing. But when I actually sit down with them and say, hey, the credit score is qualifying, the income is qualifying, the job is qualifying, hey, I think it's surprising to most people what they actually can accomplish. While you're assuming that you don't qualify and paying your landlord's mortgage every month, they are building equity on your back. The rent keeps increasing and they're not giving you any more for that amount of money. It's not like they're bringing in brand new appliances and renovating the house and now you're living in a nicer place. They're just increasing the rent every year. Over 5 to 10 years, the math is brutal. I don't even like to talk about it because when I throw around numbers in the 10s and 20s, thousands of dollars that are getting paid every year to the landlord that could be equity in your pocket, it's pretty scary. The cost of not asking is way higher than the cost of actually asking and getting a no. What do lenders look at when they are qualifying you? Yes, they look at credit score. Yes, they need to look at your credit and your debt to income ratio, and they need to look at how much money you have saved. Those 3 credit bureaus that they are talking to and looking at have all different numbers if you've noticed. So we have a high, a mid, and a low score, a FICO score, a Vantage score even now. There's several things that they look at and they are all going to balance each other out. So the length of time you've been at your job, how high is your credit score? What is your income? All of those things factor in together and it isn't a one-size-fits-all type of situation. Most of the time, they're gonna look at anybody who has 620 and above credit score. You're good to go. And that is usually even lower than what they require on rentals. I would say 80% of rentals in Las Vegas require 650 and above credit scores. So most of the time people are shocked when I tell them it's actually easier to buy than it is to rent in Las Vegas. The debt to income ratio is a little bit different when you're buying than renting. When you're renting, they don't really look at that. They don't really care at all about your debt to income ratio. But when you're buying a home, they want to set you up for success and make sure you're going to be able to make your mortgage payment. So they want to see how much cash you're using every month, your revolving credit lines, how much of your credit is being utilized. Now, if you have 640, 650, 660, 700, the higher the credit score, the better. Now we're talking about really great interest rates. Now we're talking about loan programs or loan down payment assistance programs that are available. So the higher the score, the more available opportunities for you. The more programs, the more money, the better interest rates. All right, you don't need an 800 score though to qualify for a mortgage. That's just a myth. And your debt to income. What is DTI? It's an acronym that lenders use and they speak in a language that not everybody understands, but debt to income is the ratio of your monthly money that comes in and then how much of that goes back out again to pay all of your bills. And they're looking for 50% generally, and that also has to include the mortgage. So 40 to 50% if you're coming in at that range is really good. Now here's the magical piece. A good lender is actually able to put that together, maybe pay off some of your debt, maybe put that into your loan and make sure that all of that happens through close of escrow so that we can make the debt to income work for you. The down payment, that's where it gets a little tricky. And I think this is also the biggest misconception. You don't need 20% down. That is what used to be in the 70s and 80s when our parents were buying homes, but not anymore. Now we're looking at 3%, sometimes 5%. Maybe it's a second home or an investment property, maybe 10%. But there are so many cool programs where we can even have an owner that will finance it for you. So it's really just having a conversation with the lender about where you're at, what you're comfortable with, and figuring out a solution and win-win for everybody. The down payment myth. What's really required? Although maybe back in the 70s and 80s it was 20%, now we're really looking for 3% on a conventional loan or 3.5% on an FHA loan. The 20% idea, that came from a very old era in lending when you could put down 20% and then you wouldn't have the private mortgage insurance. And sure, we still have that. If you have additional cash to put down, we absolutely can structure something that will help bring your payment down. Now we can even buy the interest rate down. So this modern era, we've got a lot of options. With a conventional loan on a $300,000 home, you're looking at $9,000 to $10,000 down. It's really not that much. And guess what? You can get a gift from a family member, and it can be a repayable gift if you don't have it. The other great thing is if you are a VA, so let's say you're a veteran or prior military, those are zero down. We love those. Or a USDA loan where you're going to do some renovations on the property, or maybe it's in an area that's considered rural, like Pahrump. Those a lot of times are also zero down loans. There's just a lot of options, and it's really speaking with someone who's experienced and knows what they're doing to figure it out. Another really exciting opportunity for most people, especially first-time home buyers, is a down payment assistance program. I used one. Almost everyone I know that buys their first home uses a down payment assistance program. Guys, it's the government's way of saying, we want you to purchase a home because we know that home ownership makes our community and our country stronger and more secure. So the government says, we are going to give you a first-time home buyer no money down or down payment assistance program. They back these loans, and you really only have to come in with a few $1,000s usually, very minimal. And I really do compare it to a security deposit and first month's rent for somebody who's renting. You've got to come in with $5,000 to $10,000 usually, no matter what, on a rental. So if you've got some cash sitting around, or you've got a family member that can help you with a gift or a loan, you have plenty to purchase a home. And I think that's a big surprise and misconception for most people. Not only that, guys, but if you have an agent that is worth their weight in gold or worth anything, they should be able to get the closing costs covered for you. A good agent is going to negotiate, and most of the time sellers understand, particularly when we're talking about first-time home buyers. They're not coming in with a lot of money. It's very different when you're on your second or third home and you've sold your first home and now you've got this chunk of cash that you can work with. But when sellers are accepting an offer with a first-time home buyer and they understand that, they know they're going to cover closing costs. That's part of the deal. So we can add that in to the offer to make it more comfortable for the sellers. We can always figure something out. It's just very simple to do, and I think it's assumed when you're dealing with first-time home buyers. So how much cash do we really need to close? $5,000 to $10,000, and if you have more than that, the more the merrier, obviously. On an honest note, I really don't like my buyers to spend their cash. I want you to keep as much in your pocket as you can, because there's always going to be those little unforeseen expenses that come up. Not only that, but you get into the house and you want to buy new furniture, you want to decorate, you want to make it feel homey, and you want to have some money in the bank for emergencies. So I'm always looking for my buyers to keep as much as they can in their pockets. I'm going to try and get every dime covered by the sellers or lender credits or a down payment assistance program every time. That is my goal. All right. Something else that can affect your first year is a very costly decision: renting versus buying. And sometimes we call it the rent versus buy trap, because people think they're going to move here and just live here for a year or two. So they want to rent to make sure they like the neighborhood. Of course, that really does make sense if you have no idea and you've never lived here before and you have no guides. But you are going to spend $20,000, $30,000 renting here. So that can be a huge expense that is really unnecessary. If you plan it well, you might be able to put that into equity in your own pocket with a purchase. And
That's a lot of money. It's a very significant amount of money. So if you're nervous about buying, I get it. If you're nervous about moving to Vegas, I get it. But if you are going to make a move to Vegas, you at least owe it to yourself to look at those two different options and what the value is in each one of them. And then make a plan. I would say don't just come here blindly saying, we're just going to try it and see. I mean, a lot of people do that, but if you can say, okay, I'm going to give myself a year, and if I like it, then I'm going to have plan B so that I don't end up blowing 3, 4, 5 years. And now I have nothing to show for it. And I want to live here because I love Vegas. If you're able to buy now or able to buy in a year, at least set up a plan that's the goal. My honest advice is rent if you have a real reason, but at least have a 20-minute conversation with an agent and with a lender. So it's a decision that you're making, that you're actively thinking about, and not just like a default, right? Because you don't necessarily have to do that. Even if we put together a let's buy in 6 months, okay, that beats drifting and just renting. Nobody likes moving that much, and rents keep going up. So make a plan. Have a strategy.
Here's what I would say ready looks like. You've got some savings, maybe 5,000 to 10,000. If you've got a little bit less or a little more, we can still work with that. But if your credit is over 600, and the higher the better, obviously, but you've got a plan, you have a steady income, you've been at your job for at least a year, you're ready. It's ready. It's time to go. You don't need perfect credit or a massive savings account. You need stability and a plan. The client that I'm working with right now, she's been a bus driver here in Las Vegas for 13 years. She works really, really hard, and she's looking towards retirement. She's maybe in her 50s. She wants to think about the future and not working forever. And I've been talking to her for 6 years about purchasing a home. I've been telling her, let's get you out of the rental game. Let's do this. She just never really felt ready. And I found her a property that was a probate sale. So she walked in the door with $50,000 in equity in this property. And I felt like I made up for lost time. So if that's your position as well, and you're thinking, I don't want to work forever, I need to be stable, and now's the time for me to think about making a move, I am here to help you make up for lost time. Probate sales are one of my favorite little golden nuggets here in Las Vegas. What happens in a probate is that someone passes away and the family inherits the property. They may have never seen it. They don't want to fix it up. They don't want to live in it. And they're not really interested in getting as much money as possible. They just want to offload it. So we come in, make an offer. The reason this is so great for the buyer is that we can buy the house for less than it's worth. And the seller's okay with this because their goal is to move on from the property as soon as possible, not necessarily getting the highest selling price. It's a win-win for everyone. If you're even thinking about buying, but you're not sure where you stand, email or text me, and we'll talk about your situation and what's best for you. No pressure, just clarity.